Good morning, welcome to Goodwill Commodities. In this video presentation, we are going to see how we can trade in Mcx crude oil today. Before looking into that, let us see what happened yesterday and what we expected yesterday. The chart which you are seeing is the Goodwill Commodities charting tool. Whenever I place the cursor on any candlestick, you can see the date and time below. As a follower of our presentation, you may know that we are putting a lot of focus on chart trading. As the statement, as the word here says, that we can chart our future clearly and wisely only when we know the path which has led to the present. So, if we don't understand the path which led us to the present, we cannot predict anything in the future. So, that is the importance of chart reading. So, if you can master chart trading, you can easily trade in any financial instrument. Now we can see what happened yesterday. Yesterday the market opened around 6,150s. What we expected was, we expected that crude has got the potential to stay in downtrend, and our expected target zone was 6,126. Right after the price opening, you can see the price came down very sharply. There was a very sharp fall in the price. Again, if you notice that, since this was a good support, 6,126 was a good support, we had explained this in the yesterday's video presentation why it was a very good support. So what happened after that, the price was trying to take a support here and it's trying to enter into 6,160s. We know what happened on the yesterday's market, that was on the previous day's market. The price was taking a lot of support here around 6,160 and it was finding a resistance around 6,190. So what happened after that? Now it should act as a resistance. Since it acted as a support earlier, now it should act as a resistance. That is what the price was trying to do here. It was acting as a resistance, but slowly and steadily the resistance is not very strong. So the price was trying to break and enter into 6,160. That pushed the price towards the next high of 6,190. We know that the price on yesterday's market was taking a lot of resistance here. Now you can notice so many times the price like in the same way what happened in the yesterday's market on the previous day also. After taking a good support, the price went till 6,190s. So what happened after that? The market again provided a support like what happened on the previous day. There is no difference. You can notice that the price was struggling to move above 6,190. Slowly it was losing its momentum, and a breakdown below 6,160 pushed the price again down. You can notice that a breakdown is pushing the price again down. Then there was a bounce back like what happened here in the same area where the market moved. In the same fashion, there was a bounce back, but again the price could not find any momentum above 6,160. That clearly pushed the price again down to 6,120s. Finally the price closed around 6,134. So this was the entire price action what happened in the yesterday's market. If you notice that everything went very clearly. This is the importance of reading a chart and also using and mastering supports and resistance. So it will follow the same path what it did earlier. Like the perfect example is the yesterday's market. Now let us see the open high low close analysis. Yesterday's market price opening is lower compared to the previous day, and it could not create a new high, and it had created a new low, and the price closing was much lower than the yesterday's market price opening and also the previous day's price closing, which still indicates the market was completely dominated by the sellers. So what we can do today? Just wait. We will add all the Goodwill Commodities charting tool. Then let us see that how our charting tool had helped us to take a perfect trading decision. Now I had added all the indicators. This is how it looks. What charting tool we are providing, it looks like the same way, but there is no difference in the candlestick. The candlesticks are the same. If you notice that right after the price opening, our charting tool indicates that there is a momentum for selling. So the price came down till 6,104. Again there was a little bit of support. Still our charting tool, then it started thinking in a way, because it knows that it is a resistance. So by default it provided you an indication that likely the price can come down. If you notice that in this particular area, again our charting tool indicating the price is likely to break a major resistance here. On the yesterday's market, the market was providing a resistance, but whatever it is showing in blue color, we will take a serious note into it because it was trading below the moving average. As our rule states that if the price is trading below the moving average, you should have a valuable reason to take a trading decision, and most probably we advise you not to take any buy calls if the price is trading below the green color moving average line. So if you notice that the price was taking a resistance along with the average, then again the charting tool indicating the momentum is still on the selling side. So if you notice, the price came down and continuously there was a drop. So two things you can answer. So why we follow certain rules? We have certain rules in order to follow this trading strategy. The rule number one is what we had informed you: if the price is opening with any gap, if the price is opening with a gap, wait for the price to try and test the first line, this first band, and if the color of the band is in red color, you can go for a selling. But if you notice, in this particular area, when the price was trying near this, the color changes, our charting tool started thinking by showing a white color candlestick, which means that don't enter, the momentum is on neutral. The second area here, we had advised if the charting tool is providing any indication within this band, you need not enter into the market. So second rule also protected you from a major loss, because you see that after reaching the target, the price was giving a bounce back, and we had informed you if the price is trading below the moving average, you should always stay in selling. So the only indication which happened was here, so it gives us a straight away profit. So this is how you master our charting tool. Also, this is how you use our charting tool and also use our support and resistance. So now let us see what we can do today. Today the expected price opening is somewhere below 6120. So you can expect crude oil to open somewhere near this 6120 zone. So there may be few changes based upon the rupee dollar factor also. So today also we are expecting crude oil to continue and stay in downtrend. Today we have crude oil inventory report. The most important thing is today we have crude oil inventory report, and our expected target, if the trend continue, was 6066. And the major area where you should focus was 6160. The reason was, that on the previous, that was 10th of March, the market found something here to push the price higher. Yesterday also so many attempts were taken to push the price above 6160. Since we have inventory report, if the price is moving above 6160, the price will get some momentum to reach 6220. But short term, in the day trading, the price will get some momentum to push towards, but 6220 will act as a major resistance. And if the trend continues, there is no issue, you can enjoy the trend. So let us see what's going to happen during the trading session. Thanks a lot for watching our videos. Happy trading. Take care. Bye.